Hello traders, Gary Wagner here, just before 11:30 in Honolulu, 5:30 in New York. It is Monday, June 24th, 2019, and this is the Daily Report for Gold and Silver. And what a way to start the week, a phenomenal continuation of a rally that really began last month, although when you read the recap or opening letter, you'll see last month's gains were about $26 per ounce. We've already exceeded that fourfold because we're up about $100 in terms of trading price change in gold this month alone. As we spoke about, what's important right now is that we do have a number of events working in unison that have been highly supportive of gold pricing, that perfect storm scenario. I believe it certainly started with the the trade war between the United States and China, how that slowed the global economy down, and how the Fed, as well as the central banks of Europe and the European Union, are acting. In other words, they're moving back towards quantitative easing. That kind of effect, I believe, is substantial. Add to that skirmishes with Iran, and that's not done by any stretch of the imagination, and you have all the components needed to really move gold to higher prices, even higher than here. On today's report, I want to talk about next levels of resistance with the caveat that it will be a fundamental shift that moves gold back down and not a technical level. With that in mind, let's take a look at our current pricing. Traders, gold gained substantially today, currently fixed up $23.20 at $423.20. Of course, we are long well below this price point, and our stop is well below this price point. So we will take a look at where we're going to move our stop to next as we pull up some charts. But across the board, precious metals did gain ground. Next, we'll look at silver, about 0.9%, a 13-cent gain at $15.42. We had palladium gaining almost 2%, a $29 gain, $1,529. That is an incredible move. Lastly, platinum, a meager move today of about 0.4% at $814.10. Let's take a look at some charts. They will be exciting today. So traders, on today's show, I'm going to try to squeeze in a few charts because I want to look at a couple of different Fibonacci retracement levels with different data sets, one with a weekly that we have up now, then with a monthly. I also want to look at a couple of daily charts to look for stop placement and also strength of trend Japanese average charts. Let's get right to it. First chart that we're looking at is a weekly chart. We do have one major fib retracement. This major fib retracement begins at these lows here, which occur just below $700, end of 2008, right when the Fed started doing their quantitative easing program, which inevitably took gold pricing much higher up to the apex here at 1900. When we do that, we get our various levels, our 0.23, our 0.38, our 0.50, 50%, and so on. We have solidly broken above this key level, the 50% retracement, and the next real level that we would want to pay any close attention to would have to be the 0.38 level. That is this dashed line right here. And of course, what's most interesting on both of these charts that you'll see is that these levels are all well above any of the major tops that we had such a problem getting through in earlier years, from really 2015 to present. Now, that is one area that if we continue to see pricing gain, we want to know how the market reacts at this particular price level, and that is 1457.50. And traders, the next chart that I do want to look at, and we don't use this type of chart very often, it is a monthly chart, but we've had such a tremendous move, and in order to put the data set I wanted to use into this framework, we really had to look at the monthly. And on this, we also have one basic Fibonacci retracement. The difference is that we're starting from the apex at 1900 and then taking it throughout the entire multi-year correction down to the end of 2015, 2016. And when we do that, we get a different kind of a look. The first thing that we can see is we've just flown through the 0.618% retracement level. That comes in at 1379. We've done that with a vengeance. And what is more important to me really is the fact that when we consider these recent series of tops, and that is really where we had a lot of resistance come into the market every time there was an attempt to move there, it would then genuinely go lower. We definitively broke through that price point and did so with a vengeance. 1379 is completely out of play, except for it's approximately where our stop is. Traders, we are looking at a daily candlestick chart. We have 3 sets of moving averages, of course, our 50, 100, and 200-day moving averages all being present and all being well below current market pricing. What is interesting is when we look at the 150, it does appear as though we will probably get a golden cross in which the 50-day moving average, the short term, will go to its rightful position, which would be above the 100-day in blue, if the market continues to move higher. And I certainly believe that it will. Now, in terms of the market itself, we have a stop, I believe, at 1378, 1379. Looking at price action right now, market opened well above 1400 and it closed on Friday right at 14. I remember around 1402. And so for that reason, I think that it would be prudent to trail our stops up, and the number that we're going to trail it to is to 1397.13. Once again, take your stop, move that up to $1,397.13. And traders, lastly, I do want to take a look at a daily chart, this in Japanese average format. We spoke about this on Friday. And the fact of the matter is that we had a really good beginning to this rally. That comes right in here at the end of May. We had a slight correction, and then we had these small body candles here with some of them having lower wicks. However, just as we saw on Thursday and Friday of last week, we had a superlative move when we look at this candle because we had no lower wick and a large body. And that tells me that the trend, or the strength of the trend, is still definitively strong and absolutely has more room to the upside. My recommendation is to maintain your current long position, move your stop. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.